Good morning, everyone. Well, new all-time highs again. It doesn't stop. It's holiday time. So we'll see if this continues. Technically, there's little reason for it not to. This consolidation that's been going on for over a week has helped to somewhat neutralize the overzealous sentiment, which those option traders that probably played short-term options uh, are underwater here, or have lost all their money. But here we go. Now the question is, can it continue? Well, just based on the pattern, yes, of course it can. This is the unknown. But like with anything, like buying a breakout, you have to have stop. Money management is always the key. So theoretically, because of this consolidation, it shouldn't come back into the base. Putting a stop below these bottoming tails could be too tight. We're looking at the NASDAQ futures here. We'll get some of the others, but you can see they're starting to break out here. There was the push up that happened overnight, and so far bullish price action, meaning, here was the bottom of this base and prices pushed out above it. And once they did that, they created what we call a price void below. And buyers stepped up at what was resistance, becomes support, basic 101 stuff. And red bar ignored, and up it's going. So right, it should keep going, and a breakdown below here, obviously it'll be a negative. So we'll see. So we have a short-term, very short-term reference point that prices should not break below. And if they do, it opens up the door to some retracement. But if this breakout here, let's say, is real, and there's no way to know whether it's not, you just play it as it is, and you money management and stop protects you from any kind of false breakout, or half the size, twice the stop, advanced management strategies, great course to consider. And so the bigger stop could keep you out of some kind of a wiggle should it happen. And that happens a lot of times at the open where you get some wiggles in anyway. So we'll see. Markets are up multiple weeks in a row. That's a little bit of a concern. Historically, they're not extended, right? This looks a little bit extended, right? But it was going sideways for a long time. But as you could see over here, where the move started at the beginning of the year, it could become more extended. So one of the ways that you could objectively look at is something extended without using indicators, right? To say, oh, this is overbought, and then you get in, well, are they the right settings, so on and so forth, which I mentioned in the advisory letter over the weekend, was to say, what, historically, when it gets a certain percentage above its 50-day moving average on the daily chart, we can see visually that prices pull back, and we weren't there yet. So it is possible that this move here could keep going, even though it's up multiple weeks in a row, and it has had a resting period of a little over a week after this move. So what we want to see now, going back to our internals, is this breadth. If this is looking good at the end of the day today, I would really like to see this breadth, and you can see the day-to-day breadth, how anemic it was. It picked up a little bit at yesterday. I'd really like to see some real buying come into this market on a breakout. Of course, it's similar to of course, looking at volume. Is there really participation? But so we want to see this day-to-day breadth, which is just simply advancers minus decliners, push up and get to an extreme, because that shows some real power and buying behind the breakout. Right? It's pretty simple. So during this move up, right, you can see where it topped out. We talked about this yesterday, and you can see the line on the daily chart. Even during this move up, breadth was deteriorating. And now yesterday or day before yesterday, it got almost close to the -0 line. So we want to see this really pop if this market is really going to show some strength today. So that's something definitely you want to be looking for. Watch that advanced decline breadth to see if we get a pop today. You could even watch that intraday, but we'll see where it goes. All right, S&Ps breaking out as well, right? Similar pattern. We like to see markets moving together. So they definitely were chopping sideways, and now they're breaking out together pre-market. We'll see if they can keep going. And because of this resting period, we really want to see this day extend itself to the upside. You can see it's been consolidating here for a few hours after the move up, and that's bullish. But we'd like at the end of the day, because of the resting period, we'd like to see this bar get bigger, right? And push higher. Now, the spiders are going to gap up, of course, right? They're going to gap up above here. And I think I've got a 24-hour chart. There you go. So they're at 310.65-ish, right? So they're going to gap up above here. So one of the things to look for in the first, even the first 5 minutes, does the first 5-minute bar close red or green? If it closes red and prices move down, there should be buyers into the gap fill. But if this is truly strong because of this base here, I think even if it's red, it should be a red bar ignored and it should keep going. And that'll be another bullish sign if that happens. If it comes down into the gap fill, then buyers better show up there as they should. Anytime you get a gap and you get a gap fill, buyers should show up and then continue to push higher. As I said, if it's really strong, it's not going to fill that gap because it's gapping up from a base. Qs, same thing, was that 202.45, so gapping above this area here, bullish, resting period. All right. Again, we want to see the breadth increasing today at the open and continue to advance. Same thing. If the 5-minute bar is red, hopefully it'll be ignored. If it chops around for a half hour, then breaking out and pushing higher. So it's in an uptrend. It's been chopping around, consolidating here. Let's see if this can just really get moving to the upside. SPX is asking put levels to sell. Well, I think it would be a no-brainer below here, but we're not going to get any premium, I'm sure. So yes, I would agree. It's going to gapping above here. This is our base, right? So we're saying 80, 85 might be a little tight, but where is it? This doesn't really update, but it's up here. That should work. It really should work because it shouldn't go down there because it's based on retracements. So it's had a resting period. It's gapping above here. Because of the resting period, that supports a bias that it should keep going. If it pulls in to fill the gap, there should be plenty of buyers to turn it around and push it higher. So it should never get below here. And probably if it gets below 30.92, we probably should get a little nervous. But we'll see what happens. Let's not get ahead of ourselves. So that should work. Okay. Let's keep going here. And we looked at the spiders, Qs. We looked at the NQs. We looked at the ES, YM. Okay. It's been the stronger, right? Remember the wider bar, and just looking at the Dow here, just going to that, it had this gap down reversal and then the inside bar yesterday. So we've got a little base and a type of a 1, 2, 3 continuation move to the upside. So again, everything so far that I'm looking at should keep going. It's more of, well, what should keep going more than the others? Well, I guess we'll just have to see. But everything we're looking at this point supports that these markets should go higher. The laggard here, which, as I mentioned yesterday, I think it was yesterday or the day before, actually looked like it was rolling over, and it certainly did. And now it's beginning to turn that around, right? Pre-market anyway. We're looking at the futures here with this green bar. So we've had rejection, and then when it broke down, it ended with a bottoming tail bar and then the inside day that we had pretty much everywhere. And let's not forget, this is at the top of the range, but right, let's look at the where we have more data on the ETF. Part of our other discussion was that this could really be the leader to the upside if it could get through this level. And that is still the case. It's got some work to do to clear it, but it's got a big void. You could say the others have big voids too. They're at all-time highs. But playing catch up is a powerful concept where, and there's shorts up here because it's been going down. You can't blame anybody for shorting up here. It's worked in the past, but that could help drive this much higher as shorts begin to cover. Transports, they move a lot with the Russell lately, but they pulled back and they had a green day yesterday. So we want to see them begin to participate as well to the upside. Oil's up here a little bit, but it's just in this choppy trading range, so no big deal there. Just kind of just going nowhere. Bonds are down here a little bit. That's supportive of equities, but they did have this turnaround. So it's kind of good to keep an eye on this, because if they really start to motor to the upside, we might get a breakout failure, but we'll just monitor them and see what happens throughout the day. Gold down a little bit, but trying to make a turn here. We've talked a lot about the bullish weekly time frame and the bullish monthly time frame, and this is just a corrective action within this bullish trend. And this should, right, theoretically, as we look at these patterns, this should get itself turned around, and this should turn into a red bar ignored next week rather than a 1, 2, 3 continuation to the downside. But we'll see what happens next week with that. Silver down here a little bit as well, but no big deal, just chopping around. So we'll keep an eye on silver and gold and bonds. But right at this moment, right, the equity markets are saying they're ready to power higher. So we'll see how it all plays out. All right. All yours, Dan.
All right, thanks. Yeah, excuse me. Yeah, McGraw, this should be a very nice put selling day, not only on the SPX, but all kinds of bullish patterns. I love Fridays. All our positions look great. Every one of them. That's a good feel. In our NVIDIA, we have a core trade, covered call, and it's opening flat, which, let's look at that. We're short the 215s, so that gave us, another $5 additional upside. We sold those calls for like $4.50, and it's opening flat, which is totally fine. The pattern's still bullish, and we'll let those expire worthless. We'll look into selling new ones for next week, because with earnings, the volatility is still going to be high. All right, gappers. Look at this ugly thing, 580. Wow, gapping down $1. That's in pain. Target, we got into a bull call debit spread yesterday, speculating on earnings. Walmart had the big gap yesterday, and look, it totally failed. Wow. But Target held up nicely. Home Depot, I see here. This could be a put spread candidate. Look at Roku again. We were talking about this amazing 15-minute chart. Wow, look at that. Just, some people in our green trading room are still long it, and we've been monitoring it with them, saying there's no reason to get out. Let just trail pivots on that 15-minute chart. BSAC, 24 bucks. It's a bullish gap, but it's actually turned, let's say, since it's gapping up here, it's leaving this island. So that is a bull island reversal, but there's no price void. Wow, this is a disaster of the day. Torsi, you know, whenever I see gaps like that, there's 90% chance that it's a bio, but nothing to do with that. AMRN, 23 bucks. It's a bullish gap, but it's big, nothing to do with it. You had a little bull sandwich down here too for Wednesday's gap. Click, 27 bucks, bullish gap. Have to keep an eye on it, it's too big. Glob, gapping down $1. Now, this could be a wide range ending bar, and it's gapping down, so a 30-minute low. This is what we call a bear gap surprise. So 30-minute low. You could short it. Day trade. DLB 6140, way the heck down here. If it can't bounce, then maybe 30-minute low with a target somewhere down there, 5850. 1650, it's a bullish gap. Looks like the all-time highs. No, it's not the all-time highs. Wow, look at that trading range on a monthly. Wow. SWAV, 39 bucks. Oh, that ain't bad. I'll put that in the little window here, bottom right. That's not bad. Look at these little pot stocks. Last Saturday, Greg and I did a Sunday live review of all our pot stocks, and it looked like many of them were trying to make a turn here. Here's the sector, MJ, ETF, and you know, never got a long trigger, which is fine. Let them sell off more. HAYN, I think was earnings. I can't tell what it's doing. HP. We'll come back to it. 2580. It's a big old mess. FND gapping down into this bar, nothing to do. LMB, penny stock toy. Fitch 952. That's a bullish gap. 30-minute high. 30-minute high. Keep an eye on old Fitch. Penny stock toy. Gapping up over 50%, no interest. This LRCX, this is a bull flag. Alex, we were talking about yesterday, flagpole, and the flag is at an angle. So this is gapping. This is a long watch. This one's not earnings. I think it's just up with AMAT. But yeah, I like LRCX, and I like CLAC, JD. That's a gap. JD has room, 3940. That's a watch. This one's doing nothing. There's our NVIDIA. DDS gapped up yesterday. What's it doing today? Nothing. I liked CLAC here. We were going to enter this into the close yesterday, but decided not to take the gap risk with a NVIDIA and AMAT. Here's AMAT up very nicely. And that was a bullish 1, 2, 3. Remember I said if you wouldn't mind owning it at 53.50, you could have shorted the 54 calls. All right, I'm done with gappers. These are some leftovers now. Sale, Marriott, Breakout, NVCR, over the high maybe. AXP is a long, over 121. Plug, I'm watching a pullback. SI pullback, new IPO. Cisco got whacked. Now, if so, with the strong market, if Cisco takes out yesterday's low, then it's a swing short with a stop yesterday's high. Look, it had a very small gap up, and now it's flat. It's still weak. So that's on my short watch list. For, bearish pattern, price void, relative weakness. This one, the monthly has room, 70 to 80. I'm watching this on a pullback, SPB. Greg's Coffee Shop. Shit, that's locked up. Look at this shit. So if this can chop around sideways here, then target might be 24 bucks into this gap fill. ESNT, that's one of our opens. Sandal here, another pot stock going nowhere. Tilray, right there, that little bull sandwich. I said it looks like a short. Look at the weekly. That is a nasty downtrend. And here's where we shorted it. This 2-bar 180 reversal, this is a weekly chart. We shorted it right in here somewhere with a target of 45 to 50. Wow, we sure underperformed on that target. Microsoft, we're long stock, looks great. GE, Roku, Uber, Beyond. I was watching yesterday as a possible put spread, but then I didn't like the retracement, and that's still, I'm not confident. Let's see, McGraw, you sent me a list. Let's look at that. All right, here we go. McGraw's list. Yeah, we're in a put spread, Nick. I didn't review opens yet because they're all fine. I'll do that, and within the first hour, I'll go through them and adjust stops. McGraw's list, CPRT. Yeah, pull back. You missed your entry. ALLK. Nah. There's so much better stuff out there. Burl trading range, put spread. Here, I'll write that one down, McGraw. Let's look at that for put spread. Retail on the rising 20, rising 50. TDG, you missed your entry, but it looks higher. Plan, no way, Jose. Nope, there's no price void. Look to the left. That's junk to the left. And Dell, it was acting bullish yesterday, but now I don't like the topping tail. CDLX, that was a beautiful gap. That would have been a 30-minute high. Look at the 15-minute. Look, a little breakdown failure right there and snap right back. So that was your entry over the high of this, over the high of that green bar was your entry. Now it's, extended. Info, that's strong put spread for sure. That's at 69 put spread. Otherwise, you need a little pullback or a 1, 2, 3. PayX, garbage, 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 garbage. I mean, put spread maybe 82s, but why would you ever want to bother yourself with that pattern? I like this gap reversal. It's at resistance right here, but if it can go sideways a little bit, then it would be okay. Haze. Nope, not unless it breaks out. Set an alarm. AMWD. It trades whippy, but I like the bottoming tail and I like the close. I like yesterday's close. So yesterday's high is fine. Stop yesterday's low. APPS. Let it settle down a little bit. Maybe next week. I'll write that one down. Today's hearing is much crazier. Is it going on now? Is it going? Yeah, I'll turn it on. All right, 9:29, so we're good. Any questions on any opens? We're 100% bullish positions with one exception. We have a bear call credit spread on deer. And, it's still relative weakness compared to the Dow up 100. Yeah, I see that Pelosi's now throwing around the word bribery. So, because that's an impeachable offense. I heard in the video perking a little bit. Don Knock. I don't buy things up 9 bars in a row breaking out. It's just not my style. All right, so in the video, I'm watching this so we could adjust our short calls, but we'll give them some time here. Orly, we got into yesterday. FISV. We have a covered call, Boeing put spread. Golf Hotel, I wanted a put spread, but we did not get filled. Work, we're long stock. SKX, flat. STX, looks good. KHC, dog, and we're just going to keep our stop. IFF, we entered yesterday. That looks great. And JD, nice gap here. Microsoft,